push the supply side. That seems to be the message coming from the president.
Absolutely. So, Stephen Moore is a well-known economic figure in the U.S. He's obviously not a classic academic Fed economist type, but he's been a lifelong advocate for supply-side policies. He's a big cheerleader for tax cuts, in particular, having powerful supply-side effects, and in general has viewed the Fed as being too tight and, if you like, too textbook in its approach to the Trump tax cuts, focusing on the demand impact rather than the supply impact. So I think we can have a pretty safe bet that if he's confirmed by the Senate, he will be a vote in favor of easy money policy, in particular against a backdrop of the Trump tax cuts, which he believes will raise the supply potential of the U.S. economy for several years to come.
Do you think he believes in modern monetary theory?
I don't know of his views on MMT. I think that is, frankly, magical thinking. But it hides, it sort of obscures a more serious debate, which is, it is the case that we are learning about what long-term interest rates are likely to be sustained over long periods of time, and the sustainability of different levels of debt and deficits among credit-worthy issuer countries. Of course, it still matters enormously, what your fiscal profile looks like going forward. It also matters what you do with any deficits that you run. If you're making productive investments or if you're creating real supply-side incentives, not just giving tax giveaways, then you get the economic growth over time that will, obviously pay for the spending that you're doing up front.
Can Stephen Moore have any impact whatsoever on central bank policy, given that he'll be just assuming that he gets through and that that his nomination process goes smoothly, which isn't a given? But if he were to be on the board, he's just one voice. Krishna, I mean, obviously it'll be him plus tweets from the president. But will he have any actual impact? Not intending in this way any disrespect for Stephen Moore individually. I think he's unlikely to have a powerful influence on the decision-making of the FOMC, certainly at the outset. And if he were to gain influence over time, it would have to be by way of presenting convincing arguments to his counterparts around the table, and economic data actually supporting the Fed is a very technocratic institution. It's also an institution that has closed ranks under political criticism from President Trump, where you see a very strong desire to support the chairman, Jay Powell. Unanimity at the decision reached this week, as you pointed out, 11 of the 17 for no hikes this year. This is a Fed that is rallying around the chairman, Chair Powell, and as usual, the leadership group, being the chairman Powell, the vice chairman Clarida, the New York Fed president Williams, they will be driving the bus, not Stephen Moore.